That's weird. I muted all of you and I'm still getting a weird hiss. Okay. Yeah. Let us go ahead and get started. Welcome back. How was spring break, everybody?
It was all right since we couldn't leave.
Yeah.
Same as having school.
Yeah.
Fun times. Yeah, same. Basically, I just like stayed home and we binge watched a bunch of stuff on Netflix. We like watched all of The Americans. That was a good show. Yeah, being stuck at home is rough. Anyway, let me give y'all college board updates first. Just like stuff you should know. I guess none of the SAT stuff applies to y'all since you already have your college stuff done and wrapped up. But the College Board doesn't have a great answer in terms of what they're going to be doing for the SAT. So, like, they were going to have a online seminar about what the changes are for this upcoming test administration. They still haven't gotten together test dates for the next few months. And I'm hoping that maybe this is the, like, final nail in the coffin for the SAT. Hopefully they take it away and never bring it back. In terms of the stuff that does apply to you, the AP test information has all been published. But here's just a brief overview in case your teachers haven't gone over it with you yet. So the complete schedule of rescheduled test dates is up on the College Board site, and I actually posted that to Google Classroom so you could check it out. It'll be the 2nd and 3rd weeks of May. All of the tests are now online and they're all 45 minutes. For your English and history tests, it's basically going to be a single essay question that you have those 45 minutes to answer. So be sure to like have good typing speed, because the faster you can type, the more that you can respond within that time. And there is still enough time between now and then to significantly affect your typing speed. And for the questions that are not for English and history, where they'll just be one essay question, the 45 minutes will be broken up into 2 periods of time, a 25-minute period and then a 15-minute period. You have 25 minutes to do the first question and then upload it. After that, you can't go back to it. And then after your first question is uploaded, they give you the second question, which you then have 15 minutes to answer and upload, and then it's over. On top of that, for all of the AEP classes that are possible on the College Board's YouTube channel, they've been posting daily review videos for every single topic. So if you want to like make sure that you are ready for your AP tests, that is probably the best resource to go to right now. Are there any questions about College Board updates or what your AP tests are going to look like in just under a month? No? Okay. Well then. Save. Okay. Let me tell you all about what we're going to be doing this week, and then we'll just get started. We'll be starting a new long-term project today that will be it is the project grade for the quarter, so it's like a big 10% chunkier grade. It's pretty straightforward, and we'll be doing it every day as part of our warm-up. And we'll be using it as an opportunity to learn a little bit of Excel, which is a really useful piece of software if you don't know. Oh, and by the way, at the end of the week when I take your classwork, I do expect you to actually like answer this item 1, how was break, like write that down. I'm going to read those responses. Nonetheless, here's what we're going to be doing in the near future, and this is the stuff that I like promised y'all that we would be doing in this 4th quarter, right? So here's what I want to do over the next 3 weeks. The first thing that we're going to start off with, even though like this is a betrayal of the logic of what we're going to be talking about, this makes more sense simply because I want to start the project that this first topic is about right now, mostly because it's going to be a good introduction to teach us about how Excel works. So the first thing that we're going to talk about is we're going to talk about investing and the stock market in general. And this is going to be a way for us to talk about using Excel, tracking markets, all of that good stuff. And then after we talk about investing in the stock market, which will be our way to use Excel, then we'll talk about personal finance, just regular old like running of a budget. And I don't like doing it in that order. We should talk about personal finance first, because you shouldn't be dumping any money into the stock market unless you have extra money, right? Like you're able to deal with all of your daily needs, which probably won't be for a while. But nonetheless, both of these are going to be a way that we can talk about how to use spreadsheets, either in Google or Microsoft Excel, which I greatly prefer. And then after we talk about these two things, then we'll talk about marginal tax rate. Just because a lot of people still don't understand how the marginal tax rate works. That isn't to say that we're going to talk about doing your taxes. Like that's a much more difficult thing that you should only consult with an expert on. But like, just so y'all know, like doing your taxes isn't impossible. Like I do my own taxes every year. It's a skill that you can pick up on like 30 minutes of YouTube. And if you use software that's designed to do it, it's actually almost trivial. I wouldn't recommend TurboTax just because you have to pay them a fee, which you shouldn't have to do that. It's just that their like resources make it easier. But you can either just do it yourself on TurboTax, or you can teach yourself to do it and save 50 bucks every year. It's not that difficult. We're just going to talk about how to understand the marginal tax rate, but we won't be actually filing taxes, you know? And then after we talk about the marginal tax rate, then we'll talk about types of debt. No, it's cool. What's up?
Wait, no, not that. The one that goes.
Okay, muted. And then after that, we'll talk about different types of debt. Student loan debt, car debt, mortgages, all that stuff, and how you should think about it and manage it. Are there any questions on what these next like 4 major topics are going to be? No? Okay. So today we're going to talk about investing and the stock market. And today we're going to be starting a 3-week project, which I guess I'll talk about closer to the end of the period. So let's just talk about stocks. And the first thing that I want y'all to know is that stocks and purchasing stocks on the stock market are not the only type of investment. I can't spell because it's been 3 weeks since I've written anything down by hand. Okay, stocks are not the only type of investment. What you should think of these as is they are high risk, high reward. And what I mean by this is that the stock market is effectively gambling, especially if you are investing in targeted individual stocks. What are some other types of investment that y'all are aware of, right? Places where you can place your money that ideally it will grow. Things that aren't stocks, or is stocks the only type of investment y'all have heard of?
No, like some restaurant chains, right?
So there is investment in individual business, but I would say that that's basically the same as stocks. It is high risk, high reward. You are putting your money into a business venture.
How about gold?
Yeah, so gold is a type of investment. And I'm actually going to lump gold in with a couple others. That is currency, just currency investment. I would argue that investing in gold would be the same as investing in euros or British pounds, in yen, or even in Bitcoin. That the active investing in those things is all basically the same type of thing. All you're saying is, hey, take my US dollar, convert it to this other type of currency. When the amount of that conversion changes, if you do it right, when you convert it back to US dollars, you get more US dollars than you did before.
Aren't there fees for doing that though?
There are fees for every single type of investment, and that stuff is all like specific and tied to the exact way in which you execute the transaction. But yeah, just part of this, all of this stuff is taxed. Yes.
Oh, okay.
Yeah. And I would argue that like stocks, currency are also a high risk, high reward. It is a type of gambling that we like sanction or whatever. But like the same app that I use to invest money in the stock market also has options to purchase gold, Bitcoin, Ethereum, and other currencies. So in a lot of ways, these things have been lumped together. What are some other types of investment that y'all have heard of that I can like give a really quick?
Property.
Yeah, property is another one. Yeah, property is another type of investment that one can do. That is to say, if you have enough money to purchase a rental property, you put that money in up front, and if you rent it out for a long enough period of time, ideally you can make all of that money back plus profit. Like all investments, it is risk and reward, and a lot of people treat property investment as if it is guaranteed. It is not, so you should not think of it that way. Like we have the benefit of living in Southern California, which has a very stable, housing market. And it even escaped like the disaster that happened in 2008, where like a bunch of places in the country had their housing values cut by more than half. And yet, because SoCal is such a lovely place to live, it was able to slip under it. A bunch of landlords are about to figure out that, yeah, no, collecting your rent every month isn't actually guaranteed. It is a risky investment, the same way that every other investment is, considering at the top of this month, we're rounding the corner on millions of people unemployed, and at the top of next month, we'll probably be closer to 10 or 12 million people unemployed. Those people won't be able to pay their rent. Southern California, fancy living life. Yeah, investing in property and real estate might be a good idea, but it's not guaranteed. No investment is actually guaranteed. Are there any other investment types that y'all are aware of that aren't stocks, currency, or real estate? Oh, that's interesting that y'all only know the high risk, high reward ones. Here are some of the low risk, low reward ones. You could have a regular old retirement account. Something like a 401k or a Roth IRA. This is low risk. You could also have a regular old savings account, though this is also low risk, low reward. Saving account. And then the other low risk, low reward one that's worth thinking about are bonds. Also low risk. And the way in which you split your money up when you invest it, totally up to you. Personally, the majority of your holdings should be in things which are safe, things which are low risk, just so that, if the market busts like it's doing right now, or like it's about to do in the coming months, you don't lose everything. Just a little bit of information about these three products. When it comes to a retirement account, as you work, you may have options to put money into these types of accounts. If you are given those opportunities, I highly, highly recommend it. From the jobs that I've done teaching, everybody is paid into my 401k account, which is a savings account. And based on the way that compound interest works, the sooner you start your account, the better. Effectively, if you begin your 401k in your 20s, all of the money invested in your 20s will be tripled by the time you retire. So the $10,000 that I can put away now in my 20s will become $30,000 or probably even more than that by the time I retire, right? All of the money that you invest in your retirement account after that will only get a chance to double or have gains which are less than that. So by the rules of compound interest, the sooner you can put money into your retirement account, the better. Not to mention your income is normally taxed, right? That is to say that when you get your paycheck, some money is removed from it and given to the government. For all of the money that you put directly into your own retirement account, that money goes in untaxed. So the more money that you can dedicate from your paycheck to that, the less taxes you have to pay on your paycheck. Number two, the other low risk thing that you can do is you can set up a savings account. And I'd be willing to bet that most of y'all already have one. Normally when you set up an account with a bank, you are given both a checking account and a savings account. Here's the difference. Money in your checking account is made available immediately. And I don't know why people unmute themselves and then have like side conversations in their spaces. Nonetheless, normally when you set up a bank account, you're given a checkings account and a savings account. If money is in your checkings account, it's available immediately, right? So you could go to the ATM or go to a bank, talk to the teller, and withdraw all of that money cash immediately. However, so long as that money is sitting in your checking account, you are making $0 on it every month, right? You are not gaining any money from that money sitting in that account. Instead, the bank is. You should also have a savings account set up in parallel to that where you can transfer money from checking to savings or savings to checkings. The only difference is that if money is in your savings account, there's normally a delay on taking money out. So if you had a significant amount of money in a savings account and you wanted to withdraw it or move it to another bank, usually you would turn in the paperwork to do that. And then there would be something like a 48 or 72-hour waiting period as the money is moved. And the deal with that is that savings accounts are making interest. So typical savings account interest rates right now are like 0.5%, which is to say for every $200 that you have in a savings account, your account value is going to go up by $1 a month. It's not a lot of money, but if you have a lot of money in a savings account, then the amount of interest that it accrues is could be non-trivial, right? Like I said, you're getting back $1 for every $200 in the savings account. So if you have $2,000 in there, that's $10 per month that you're making on that account. The only upside, in my opinion, to a savings account is that it's no work at all, right? You don't have to figure out what it is you're investing in. You're not really taking a risk. Even these accounts, you have to do some setting up. Like to mess around with my 401k, I have to like set up an appointment with Wendy in the money office and be like, hey, Wendy, please help me with my monies, right? With your savings account, if it's already set up, it's already set up. You just transfer money into it on the app on your phone, and it will slowly accrue extra monies. Last thing is bonds. Do y'all know anything about bonds?
Yeah, isn't that whenever you bet against a share?
No, that's short selling. That's something else.
Oh, that's shorts. Yeah, my bad.
No, that's cool. We'll talk about that later. We'll talk about that way later, actually. We'll probably talk about that next week as we're like knee deep in the stock market project itself.
For sure.
Bonds are when the government borrows money from you. The government borrows money from you instead of the other way around, like it works with student loans. So when the government needs to raise funds, if they need cash on hand, which I took advantage of this, I think it was 2015, the California government was selling bonds. Basically, they are certificates that you can purchase at a bank. And the deal is that they can be bought in increments of whatever value. The ones that I bought, I think, were 100s and 500s. You give the bank cash or money from your account. They give you a government certificated bond, right? And the deal with bonds is that they have to be mature before you cash them in. So the bonds that I bought from California are going to take 10 years to mature. So in 2025, I'll be able to sell them back to the bank, right? So you give the bank cash, the bank gives you a bond. The bond has a certain value on it. The deal with it is that you literally cannot cash it in until it's mature. And usually they take a minimum of 10 or 15 years before they mature. But once they mature, you can take them back to the bank and cash them in. The exact value that they're worth when you cash them in is always going to be higher than it was when you purchased them. But the exact amount that they go up depends on a bunch of different calculations done by the bank, things like the inflation rate, etc. And the longer that you wait to cash them in, because you don't have to cash them in the day that they mature, you can hold on to them as long as you want. And the longer that you wait, the more money that they'll be worth. I took a homie to cash in some bonds when he moved to LA a few years ago, and when they were purchased for his like 5th birthday or whatever, like it's actually kind of a dope thing if you're like a 10-year-old to be given a bond as a gift or whatever, because you know it'll mature when you turn 20 when you're in college, and then suddenly you'll have this cash on hand. They were $500 bonds, but each one of them I think matured to like $1,300 after 10 years. So usually a bond will be worth just a little bit more than double what it was purchased for. Bonds are low risk, high reward usually, but the thing is that you cannot pull your money out whenever you want. You have to wait until they mature, then you can get your money out of that investment. Is this okay? Are there any questions on these like other investments before we talk about stocks? Because we're about to talk a whole bunch about stocks. Good? Okay.
Yep.
So now, all about stocks. For a company to even have stocks, it has to be publicly traded, and not all companies are publicly traded. A lot of smaller companies are privately owned, which is to say that they are not listed on any stock exchange anywhere, and all of the money for that business is either owned by one individual or one family. So just a quick like example of these two in terms of video games, Nintendo is a publicly traded company. Like you can purchase stock in the company of Nintendo, which gives you the ability to vote in some of their functions and to receive updates as one of their official investors, even if you only have one stock. But y'all know the video game Borderlands? It's made by a smaller company called Gearbox. Gearbox is not publicly traded. There is nowhere you can go to buy stocks of Gearbox. That entire company is owned by its owner. However, if a company is publicly traded, its name appears on a stock exchange somewhere in the world. And here's just like a good working definition of what a stock is. A stock is a share in a publicly traded company traded on a public exchange and just in terms of like terms that we'll be coming across later, a stock is treated as a security and they also provide partial ownership. So if you own a stock in a company, you literally own some tiny fractional percent of that company's value, and you can vote with your shares, which if you own one or two stocks is probably literally irrelevant in the grand scheme of things. But people with a lot of money will do things where they acquire a significant portion of a company externally, which would then allow you to take that company over from the outside. So if you were like behind the scenes and you bought up 51% of a company's stock, which is usually why large amounts of a company's stock are held by a few people so that they always have voting power in the company, that is significant. But like theoretically, if you were to go behind somebody's back and purchase 51% of their company from behind them, you would then technically be in charge of that company. Is this okay?
Yeah, but that's only if it's a public company, right? Obviously,
Only if it's a public company, yeah. Yeah, you could never do that to a private company, yeah.
Okay.
And just so y'all know, stocks are only traded in business hours. Which is why they bother with that corny thing where they like ring that bell at the top of the New York Stock Exchange. Because literally stocks only trade hands Monday through Friday, 8 a.m. To 5 p.m. Eastern time. And this would be the case for the, this would be the case for the New York Stock Exchange, the NYSE, which is the biggest stock exchange in the United States, right? But that is to say that if you have stocks and you are attempting to buy them or sell them, and let's say you put the order in on a Saturday, nothing is going to move. If you put in stock orders on a Saturday, that order won't go through, even though it's on the internet. That order is going to be held until Monday. So if there are additional price changes in stock value over the weekend, if you commit to buy $100 worth of stock on a Saturday, just so you know, be forewarned, that number can change by the time that the order actually goes through on Monday. Or if something is happening in the market and it's bad and you're trying to dump a bunch of stock and get your cash out, right? Again, if you put that order through on a Sunday morning, it won't go through until the next Monday, right? And so all of the values can be shifted around. A bunch of stuff can be changed by the time it actually goes through. The reason why I bring this up is that if you are investing in foreign stock markets, because the New York Stock Exchange is one of many, have you all heard of any of the other stock exchanges? Because don't get me wrong, New York is number one, but do y'all know about any of the other big ones in the world? The New York Stock Exchange is the biggest one, which is then followed by the NASDAQ, which is also North America. It's like a collection of tech companies and manufacturers. But immediately after that is JPX, the Japan Exchange Group, which is out of Tokyo. And then after that is the London Stock Exchange, which is out of London, of course. Which is actually physically where a lot of like the money trading of the world occurs. Whenever it comes to one of these foreign regions, please consider time zones when you put in those orders. Because if you were to put in an order right now for the Tokyo Stock Exchange, it wouldn't go through until they were open the next morning. Is all of this okay? Are there any questions up through here, or is there like no new information yet for you? Okay. So let me tell you what the project is, and I think in doing the project, we'll learn a bunch of new skills and ways of thinking about the market. So here's what the stock project is going to be. Everybody just inherited $10,000, not real dollars, but you know, calculus fun bucks. So you inherit $10,000. And what your task is all of you are going to invest it in the stock market. And when you invest it in the stock market, for every single one of the businesses that you think you are going to invest your money in, so for each company, and of course I'm gonna post this with a rubric to Google Classroom today. So for each company that you're investing in, I need you to give me a 500-word breakdown of why, with sources, why it is that you are investing in that company. Now, just so y'all know, if you were actually given $10,000 to invest in the stock market, how many different investments do you think you should purchase? Would it be wise to dump all $10,000 into a single company?
No.
Diversify.
So, yeah, I'm actually going to leave that. You know what? No. Let's do this. Just because I feel like if I ask you to give me 500 words for each company, that will incentivize you to invest it all in one company so that you only have to write one thing up. Let's do this. 500 words total for as many companies as you want. Yeah. You have to give me sources if you're going to do multiple companies, but I just need a 500-word breakdown in terms of why it is you are going to invest in each company. You can invest in one company. You can invest in 100 companies. The way you do this will be up to you. And just so you know, if you go with very few companies, that is extremely high risk, high reward. And if you take this money and you split it out over 100 different investments, that would be a diverse investment, so diverse companies. And again, companies in different sectors. This is lower risk, right? Because if one of those companies tanks, you don't lose all 10,000 of your dollars. But if you bet on one company and it booms, right? You bet on one company and their value gets multiplied by 100, you could take your $10,000 investment and also multiply it by 100. And what we're going to be doing as we go along with the stock project is we're going to track it in Excel, and I'm going to send out the template that I want everybody to use. And we're just going to track our stocks daily to practice that, because that's what investing in the stock market actually is, man. It's just looking at a number and watching it go up and down from day to day. And it goes up and down for the silliest reasons, based on news and rumors and politics and everything. So let me give y'all a little bit of insight, or like a bit of an example in terms of how one might go about this. What are some companies do you think that we might be able to invest in? Where are some places where you would place bets, put this money?
Amazon.
So why Amazon?
Because I don't know, if anything, it's just, well, obviously not during this time right now, but usually, like, there's always like a bunch of, like, just because of the conveniency, to be honest, you can get whatever you want in like literally a day, and it has mostly everything that you need, like basic home goods and stuff too. So
these are the kinds of thoughts you want to have. So yeah, I like where you're going with this. I would argue that maybe Amazon might have limited growth in the near future, mostly because when Amazon started out, they were a bookseller. Then they moved on to selling everything. And now they've even set up their own like streaming site, like they're competing with Netflix, and they make their own content. It seems like they've branched out so much that it would be difficult for them to grow even larger. You know what I'm saying?
yeah.
Like the chance to multiply your money by 100 with Amazon is probably gone, but Amazon is probably solid unless something happens to them politically based on the stuff going on with their workers. But this kind of like thinking where you're basically just spitballing and guessing, yeah, this is investment. It is straight up gambling based on how you think the world is and how you think the world is going to be in the near future. But nonetheless, we're going to invest some of our example money into Amazon. Anybody else want to spitball out another company? We'll take 3 or 4.
How about like a
Tesla.
biotech company that's working on a vaccine?
That's a big one that people are doing right now, where everybody's trying to guess what small medical company gets right with either a vaccine for COVID or a testing kit for COVID or a cure for COVID. I've read a million of those articles, and like full disclosure, I may have invested in one or two of them because I had some like extra money in my investment app. I'm not going to get into that here, but if you want to do that for your project, like pick a couple of those and track them, go for it.
Got it.
Yeah. Anybody else want to call out some companies that they would consider throwing money into?
Tesla.
We will toss some money into Tesla. Sure. And we all know about them and Elon Musk. So I won't, oh my God, I haven't written in weeks. So I won't get too into that. Any others that we want to try and toss money into?
Google.
So I don't think the stock is called Google anymore, is it? Yeah, so technically you can't actually invest in Google. The company name is now officially called Alphabet. But we'll go ahead and we'll invest some money in Alphabet. That stock, if you invested in it a long, long time ago in the 90s, it probably would have made you rich because the stock value for them right now is absurd compared to where it started off at. We'll look at all of this momentarily. And here's the one that I'm going to personally toss out there, Sony. And in terms of Sony, why do you think it is I would consider investing in Sony at this precise moment? Y'all
The
follow
PS5
video
is
game
gonna come
news?
out soon.
PS5.
Yeah, and again, paying attention to what's going on in the market, like looking at the news for reasons why a company's value would go up or down. It's the type of nonsense you have to consider when you invest money. And that's what I'm looking for in the 500 words. So again, I don't care how you choose this, but when you when you are going to invest in a thing for this project, just tell me a little bit about why. So I would invest in Sony because, you know, the PS5 might cause their stock value to go up momentarily. They launch the console and then I sell and move my money into other investments. So let me show y'all a little bit of example of like what it is I'm going to ask y'all to do. And we're going to be doing this every day for the next 3 weeks together. We're going to learn a little bit of Excel. And luckily, you don't actually need Excel in order to do this project. It is more than sufficient to do this with Google Spreadsheets, which is why I will be doing this in Google Spreadsheets. Y'all can see the window?
Yeah.
Yeah? Okay. And so today for the homework, on top of the 500 words that I want y'all to write me about what companies you are investing in and why, you'll be making one of these sheets and I'll be putting up the example that I give y'all here. Is the text readable? Should I zoom in a little bit?
No, it's good. It's good.
Okay. Cool. So here's how you want to think about this project. And like I said, I'm giving y'all $10,000. So the amount of money that you invest today on your first day needs to be less than $10,000 in total, right? And so, sorry. What you need to do for your sheet is every day we'll be copying this sheet down, and your your sheet is going to need 4 columns in it every day. Stocks, the quantity of stock, the total value of, the stock, yeah, the quantity, the value of the stock that day when the market's opened, therefore the total value, and then the grand total down below. So using the example that we set up is we said that we want to know about Amazon, Tesla, Alphabet, and Sony, right? So for each one of these, and don't feel limited to the New York Stock Exchange and the NASDAQ, you could pull stocks from whatever stock exchange listing you want. Just know that you will be looking up the value from that stock exchange every day. So I guess I should also add the market which market it is that we're looking at. And what were the ones that we wanted? We wanted to look at Amazon, Tesla, Alphabet, and Sony, right? So let's start with Amazon. So all that we really need to Google every day is Amazon stock. So as it is right now, one share of Amazon is worth $2,275.25. And the stock itself is listed on the NASDAQ as Amazon, AMZN. So we're going to go ahead and put that data here. So it's a NASDAQ stock. The stock is technically AMZN. And the value at the moment that we looked it up was 2275. Is that okay? How I put all of that stuff into my spreadsheet?
Yep.
How many shares of it do you think we want?
One, because it's expensive.
It is a very, very expensive stock, yeah. And you know, there are some companies that will let you purchase fractional stocks, though the legality with all of that stuff is really weird. So we're not going to deal with any fractional stock anything. We're going to assume that we can only buy whole stocks. So yeah, we're going to start with one because we have a $10,000 cap. So we're going to purchase one share of Amazon. And so the total value is pretty obvious, but the reason why we're going to be doing this in Excel is the fact that if you don't know, Excel can do math for you. So if I wanted to know, well, hey, what is the total value, right? Well, it's going to be the value that day multiplied by the number of shares of it that we are going to purchase. So I'm going to say that the total value that we have in Amazon stock is going to be equal to, and whenever you type an equation in Excel, you always start off by typing an equals sign, this number, and notice how when I click it, it highlights it orange and it types in D2, right? In Excel, it actually uses the position on the table as a variable. So what it's saying is take the number inside of cell D2, right? So column D, row 2, and then multiply that number by the quantity. We only have one share of it, so that number times 1 is just going to give back, well, itself. Boring, right? Is that first one okay?
Yep.
Yes.
Okay, so let's go ahead and move on to Tesla. What's Tesla trading at today? Tesla is worth $730.51 a share. So again, I'm going to start off by typing in my basic data. Tesla on the NASDAQ, TSLA, NASDAQ, going to give Elon Musk some more of our money. And Tesla is at 730. Okay. And how many shares do y'all want to purchase of Tesla? How much money are we going to give Mr. Musk today?
1.
4.
Yeah, and I would do 1, but I want to show off what Excel does. Let's buy 4 shares and assume that the Cybertruck is going to make us all rich, and then we'll be able to cash out after Cybertruck launches. So again, to get the total value of hypothetical money that we have invested in Tesla, I'm going to type equals, and then I'm going to click the box equals this number, our stock value, multiplied by this number, the total number of shares that we have, and it'll automatically multiply them whenever we change them. So that is to say that if we purchase 4 shares of Tesla, we will have $2,920 invested in Tesla. And the nice thing about building it up this way in Excel is that you only have to do this once, because check it out. Let's say that I were to sell this or buy this or whatever, right? If I were to change it to 5, it automatically changes the total value. It's a really useful way that you can fidget and play with numbers without having to do any of the math by hand or without having to like bust out this thing. I'll be real with you. I only ever use the TI-84 at school. Like I never actually use this to do my own math or finances or whatever. All of that stuff is way easier to do in Excel, way more visual. Okay, so now let's say that we're gonna invest some money into Alphabet.
Mr. Rob, can you zoom in a little after?
Yeah.
Thank you.
Is that okay?
Yes, thank you.
Okay. Oh, sorry. Okay. So the company Alphabet, yeah, GOOGL, also a NASDAQ stock. It is currently trading at $1,264. And how many shares of that should we purchase?
2.
Okay, 2. So then this is going to be equal to the value multiplied by the number of shares. Okay, and so we now own $2,528 worth of Google. Now I'm going to put the rest of the money into Sony, and here's probably the easiest. Oh my God, I said Google and it woke my phone up. Here's the easiest way to do that. We're going to say that this is going to be equal to, and I'm just going to put it down here. So here's our total investment. And I'm going to say that this is equal to, what is it called when we take all of the numbers and we add them up? What is that called in math? Begins with an S. Yep. So we're going to say that our total investment is equal to the sum. And notice when I type in a command that actually works, we'll get a drop-down menu with suggestions, equals the sum of the following parentheses. And I'm just going to take all of these boxes and select them. And this will make it so that our total investment, E2 through E11, the total is always represented down below. And again, as I change any one of these numbers, because of the way that I built out these equations, they all get updated live. So when I when I change my number of shares of Google to 3, right? It automatically changes the total value we have in Google, and it automatically changes the total investment. No need to go through and type any of that stuff in by hand. Is this okay?
Yes.
So that last company that we're going to invest in, like I said, our major bet that we're making for the day is that we are going to invest the rest of our money in Sony, which is nice and cheap, right? Sony is trading at $61.73, and it is on the New York Stock Exchange. That one is not a NASDAQ stock. That's probably because they're a much older company. If you don't know, Sony's been open since like the 1940s. They were founded during, like, right after World War II. Anyway, Sony, it's trading at $61.43. And so, how many shares should we buy?
35.
Okay, so here's what I'm going to do. We'll purchase 35 to start. And I'm going to say that this is going to be equal to this number multiplied by this number, just like I did with the others. And when I hit enter, it's going to update that number, and it will also update the total automatically. Is this okay?
So every
Yep.
what numbers do we change? The value?
So I'm going to post the sheet. I want the companies that you invest in to be different, and you should give me an explanation in terms of what is driving your initial set of investments. And then I also need you to therefore go through and determine the quantities for your set of investments and make this same sheet. But like I said, I'll be posting this so you can actually just like take it and work from it to enter your values into. Also, I think we can afford a few more shares of Sony than this. So this one, I can pump this up to 37. That gets us closer. Yeah. And so right now our total investment is $9,995.91. And so the last thing that I'm going to have y'all do is put aside your total cash on hand, because as we go through the project, we're going to have opportunities where you can sell off your stock and use that money to purchase new stock in case one of your investments isn't doing well. Or you can even trade stock with your classmates, but of course all of those trades have to be approved by me, in case you think that there's something to gain there. So the last thing to toss over here is cash on hand. And I'm going to do the fun thing, and oh God, it's not Excel. I was going to make it green. I don't know how to change the I'll make it green before I send it out. So this is just going to be equal to, how much money did we start with?
10,000.
10,000?
Yeah.
And then from that, we will subtract our grand total investment. So we have $4.09 left, just in case we want to invest that $4.09 in anything else on these markets. And again, the neat thing about this is that all of this shifts automatically. If we change any of the quantities or values, it automatically goes through and recalculates our total current investment and our cash on hand. And so what we'll be doing every day as we go through this is we will be taking our sheet and we will be copying it over. Oops, sorry. We'll take this sheet. We will copy it to this, duplicate. It's an easier way to do it. And so this first one, today's the 17th, we'll call that 417. The next day, we'll call this 418. And what do you think we're going to update on here tomorrow? What will be different about this information?
The stock price.
Different stock price. So every day after we do the initial part of this setup is we'll be checking into the stock market for each one of your investments every day. And we'll be updating the value just to see how that affects our daily value. Now, just so y'all know, it is typically recommended that when it comes to investments, you hold over long periods of time. It's not the smartest thing if you have a little bit of money to play day trader and buy and sell stocks responding to what happens by the minute. But you know, that is a thing that some people do for a living. Anyway, are there any questions on this project, the setup, the big idea here?
Yeah, so are we gonna start together tomorrow, or should we do it like solo today?
Do it today as your homework. I'll be posting this along with like the details about the project, like what I want you to put in the 500 words, what your sheet should look like. And then do it as homework for tonight. And then tomorrow when we come in, we'll keep talking about stocks and investments. And we'll talk about some of the other stuff you need to know about, like stock buybacks and stock splits.
Okay, and then one more question.
Mm-hmm.
I have Excel and Google spreadsheets. Which one do you prefer?
I'm cool with either. Honestly, it's up to you. I would recommend that if you are going to use one for your like personal use or whatever, I always use Excel just because I think it's a little bit more robust. But they are identical to the point that you could literally make the spreadsheet in Google Spreadsheets, download that to your computer, and then open the exact same file in Excel. It literally doesn't matter.
Okay, for sure.
Mr. Rob, are we gonna turn it in or just keep it by us? Like right now, the first things we're gonna do.
You'll just make it and then share it with me. Like there will be a spot for you to upload it on Google Classroom. And the only two things I need turned in are the 500 words with links and sources as to why you are going to invest in the companies you're going to invest in. I'm not looking for too much there. And a spreadsheet that works. Make sure that you type the equations in. Do not calculate it and type in the numbers, because I expect you to use the equations that are built into the spreadsheet to automatically calculate the changes in your investments day by day.
Okay, thank you.
Mr. Rob,
Yep.
do we need one 500-word essay, or do we need a 500-word one for each stock?
One 500-word essay for the whole set of investments, just because I don't want to incentivize people to only invest in one thing, just so that they can write less. Typically, if it were an actual proposal to somebody with investing money, you would have to do a breakdown for each company that was much longer than 500 words. But for the sake of this, just keep it short, 500 words, no matter how many stocks you're going to invest in. And smart money, invest in a bunch of different stocks in a bunch of different sectors of the economy and hold over long periods of time. This project is really just a way for us to learn the vocab, the logic, and the basic Excel skills. Any other questions out there?
Nope.
That's it for today. Y'all take it easy, and then when we come in tomorrow, we'll talk more about stocks and watch numbers go up and down. Peace, y'all.
See you.
Thank you.